Guys ever wondered why it seems like the more information you gather, the worse you do in the market? Right? Have you guys really ever sat there and pondered the fact that the more strategies you learn, the harder it is to pull the trigger, the harder it is to find a setup, right? And even though that sounds very contradicting, it actually makes complete and utter sense, right? Because if I'm constantly observing all this information, right? Market information, we see all these different chart patterns, we're using all these different indicators, indications, right? It's gonna keep me ignorant to what actually my goal is, ignorant to what actually works. See, ignorance is the main way, right? Ignorance is the leading road, it is the main path to inconsistent results, right? When we are ignorant to what actually works, we cannot actually demonstrate the behaviors, the principles, the beliefs that get us across that finish line of consistency, right? So today in this lesson, I really want to break down what it is we need to know and understand to make these results in the market and what we should let go of, right? And the beliefs that we really need to challenge that are keeping us from attaining the results we desire, right? So, we had a really good week last week on the Discord. The market has been in a massive downtrend, right? And this brings me to my first principle I want to go over in the market is market structure. See, the market has a language. Just like me and you can communicate, the market communicates to us. But the thing is so many people aren't listening to the proper communication, right? Tons of people are constantly watching all these indicators. Tons of people are watching all these different theories and strategies that all these other influencers use in the social media atmosphere, right? And what they're not understanding is that whatever influencer you follow, whatever strategy you're taking, you have to understand the person that you're watching and learning from has built a relationship, an understanding around whatever indicator it is they're using to the point where they're able to extract the proper information they need from that indicator to put on great trades. And I really want to break that down to you today, right? So becoming a consistently profitable trader isn't about finding this perfect strategy that's underneath a rock. It's about building a relationship with the market, one you understand, one that keeps you in a state of neutrality, right? Where I don't need to be right. I'm in a state of serenity, right? I'm okay and I accept my losses because I understand the principle of the law of averages, meaning we don't need every single trade to work for us. I understand and implement probabilities. This is another very important principle every single trader needs to lock down, right? See, for the longest time, guys, and I am massively guilty of this, is I based my value on the color of my day. If I had a green day, I walked around feeling great. I was the best man in the world. I was a great I was a great man. I was doing hi, how are you? Just my emotional state was extremely high because I was basing my value, my worth on my P&L. See, what happens with that is you're playing a game, right? That there's no way you could always be right. That's not even our goal to be right. I don't even focus on the amount of money I made in a day. I focus on how well I implemented my process, how well I was able to approach the market in a systematic, repeatable way, and what sort of results I got from this, right? Really rewriting that program in my mind. And this does not take, dude, guys, this is one of the hardest things you're ever going to do, right? So really understanding that, hey, my value isn't based on my P&L. My value is based on my ability to implement my process, implement what it is I know that actually works, right? So really starting to realize that and going, okay, guys, listen, right? It's not my goal to put on home runs every day. So if that's not my goal, I don't need a perfect strategy. Then I have to ask myself, what is it do I need? Right? If it's not the perfect strategy that gives me the results I want, what is it? It's the relationship I build with this game, right? And it all comes down to understanding, right? We must understand what the market's telling us. And this is why every single video, every YouTube video, every course, everything I do and talk about has everything to do with identifying market conditions, right? And that's a really broad word. So let's really dissect that, right? So when I sit here and say you must identify market conditions and adapt to them, what is it am I talking about, right? And in reality, it's understanding, number one, what sort of move am I trying to do? Because if I need something to identify, right? If I need to identify the market conditions, I first need to understand what sort of conditions am I looking for to fulfill what it is I'm trying to accomplish, right? So if I'm a day trader, meaning I make moves from 9:30 to 4, right? I'm an intraday day trader, right? Meaning I need to put on a trade. I need to understand, right, the highest probability for an up or down move. Meaning I need to understand what the market's telling me when it looks like this and be able to go, okay, there's two scenarios that are going to happen today. I'm a day trader, so I need to capture a intraday move. What is a realistic intraday move? Well, that's going to be a market imbalance, right? Which is a space between critical level to critical level. If you guys want more on that, get in Trader Bootcamp. I offer a full course on market imbalances. But basically, in a nutshell, it's a 50-50 perspective. I'm an intraday day trader, right? Number one, becoming aware of what I'm trying to accomplish. What am I trying to accomplish? $1.50 to $2 move. Okay, now what's the highest probable scenario for that? Well, it's either going to be a bullish or bearish move because the market moves up or down. Okay, so how do I know, right? What do I need to look for to identify the conditions of the market to capture this move that we're talking about, right? And this is where we're going to really dive deep into understanding the areas of value, the pint numbers, the critical levels. Why are these so important? Once again, I break all this down in Trader Bootcamp, but it's because this is the areas with the most volume, right? So for me to understand which way the market's headed today, I need to understand which level to look at. These are the levels with the most volume. Whatever happens at these levels are going to display a chart pattern. This chart pattern is a live, visual, quantifiable measurement of human behavior. Okay, what does all that mean? It means the banks, the people that are actually in control of the market, are going to make a move at this area of value. And whatever move they make, I'm going to be able to exhibit, right? And based on my understanding of that chart pattern in that zone, I'm going to put on a trade targeting either A, the bullish market imbalance, or B, the bearish market imbalance. And all of this is based on understanding the market and what it is I need to see at these areas of value to put on these trades, right? So guys, it's very important to understand the principles. Understand, hey, listen, this is, once again, I'm an intraday day trader. I'm looking for a 40 cent to $2 move, right? What do I need to see that's going to give me the outcome I desire, right? So that is how I approach the market each and every single day. We cannot be ignorant to this. We have to be understanding of this, right? And with that in mind, right, I have to understand there's no perfect strategy, right? And basically what I mean by that is there is no perfect trade. It's never going to work the way I need it to work every single time. I need to be like water. I need to be fluid. I need to be in flow state, meaning there's things happening, right, and that I'm aware of that I don't need to be aware of. And then there's things that I'm not aware of that I don't need to be aware of, right? I just need to be aware of what the price needs to look like at the critical level and an understanding of the market concepts and principles. Why is that important? Because until I understand market structure, right, I'm not going to be able to A, hold on to my trades long, or B, be able to get in trades when I should, right? See, market structure is your best friend. Why? Let's go back to market communication. See, so the market communicates to us, right? Josh, what do you mean the market communicates to us? Okay, so if it's my job to capture a 40 cent to $2 move, right, I need to be able to identify the market conditions. Okay, so the market, that implies that the market displays conditions, okay? The market moves in a manner that gives me the information which I can then deem bullish or bearish, okay? And this is important because we're trying to capture a move. We're trying to capture an imbalance. So I need to be able to understand what the market's doing via structure, right? Via chart pattern, via area of value, so that I can then A, target a move to the downside or to the upside, right? So market structure is going to be your make or break, right? And this is what I love about market structure. It really amplifies that 50-50 perspective, right? And I'm going to break down a trade we took Friday live on the Discord, right? And I want to break down what it is we were looking for and basically how it is we came up with it and etc. Okay, so number one, right, we have a downward trend, right? The market is moving downwards, but we're coming into a pretty strong area of support, which was at 493.56, right? So there's always a question. Okay, so how I approach this each and every single day. To understand the conditions of the market, I must understand the structure of the market. Okay, so we get this high right here, right? I'm very big with the break and retest. The break and retest is market structure. So you whip out that 1 hour time frame, right? And then you just start drawing some lines, guys. You start going, okay, we got a low here, okay? Then we get a low here, okay? I mean, look at this. Okay, so now the market's moving down, the market's moving down. I don't really care about this level, right? So now what I'm gonna do is go like this, okay? Where are sellers continuously coming in? Okay, sellers are showing up at, and this is why critical levels and pin numbers are so important. Okay, so look at the highs over here, right? We got Tuesday's high, right? Which price literally ripped right into Wednesday, right? This is previous day high and rejected. So sellers were in control here, right? So the way I do this is I go, okay, just like if this was a 5-minute time frame and I was viewing it for market structure, I want to keep seeing lower lows, right? I want to keep seeing the market make a low and then make another low, right? Boom. Right? And now this is how it works. We must identify the area with the volume. Okay, so as the market's moving down, it's moving down, right? It then starts to make another low. Boom, and sinks through it, right? So how this starts to work is now as price comes back to this area of value, right? We identified this level in pre-market on Friday morning, right? Where it was 550, right? So the way this works is the market's going to communicate to me and tell me, listen, whatever I do at this level, I want you to trade with me, okay? So if sellers defend this level, it's going to give you the understanding of the highest probable trade is a move to the previous low, right? That is what we call a market imbalance back down to 49356, right? But if buyers display strength at this level, then I want you to trade with me targeting the previous high, right? Which is previous day high, right? So this level now becomes our critical level. So the reason I call this the critical levels, right, is because when I was studying physics a long time ago, there's a theory which is called critical point analysis. So the way critical point analysis works, right, and the way and I always teach this with helping people understand it, right, is there's a very large rock, right? It's round and it's on top of a hill, but it's on a flat surface, right? So you have your flat surface and then you have your hill that begins. And a large rock is right on the corner, right? It's right on that spot. It's not yet over that spot, but it's right on that spot, right? So that spot, right, is now very important. That is what we call the critical point. Because if and when that ball tips over, right, over that little corner, the speed and momentum, there's no going back, right? The ball's not going to roll halfway down the hill and decide to come back up. No, this is a critical point. This is the critical point. And the analysis is the feather that drops on the rock, causing it to tip. Now, just kind of wrap your head around that for a minute. It's that little feather that falls at that critical point, causing that boulder to go over that critical level. And then all the speed that comes with it, all the momentum. So that is why, guys, these levels are so critical, because whatever happens at that level, that 550, is going to then spark a movement on that boulder, and then you're going to be able to put on a higher probability trade, right? And trade with whoever defends that level, right? So that's the theory behind the whole critical point analysis, right? Is understanding the boulder is not significant, right? It's the level that's significant. It's the feather that drops on the boulder, causing it to move just a hair and picking up all that momentum. That is significant, right? So that's kind of my theory when going through this market. I'm looking for levels that hold significant volume, because whatever happens, the feather at these levels is going to then spark a movement for the rest of the day, giving me a better understanding as a day trader, right? Giving me the higher probability setup. So now as price comes into our critical level, right, we have to understand, where is this critical level and why is it important? Well, number one, right, look at 544, right? This is previous day, end of day. Guys, every video I say it. Why is it important? The volume. The volume is astronomical at end of day, right? So we want to keep our eye on that. That's what we call a critical level, because what happens at that level is going to display an understanding of the market conditions, right? The market's going to display her conditions at this critical level, right? And now we have the next, well, the end of day from the previous day. So previous end of day, and now end of day, right? Both levels, tons of amounts of volume, right? Once again, mega volume. So now we have previous day low as well. So now price opens up, boom, rips into our level, right at 9 o'clock. So now open print established, and open print is very close to end of day. So now we have 4 critical levels, all within $2. So whatever happens at this zone, right, we're just going to make this a little bigger. Whatever happens at these levels is going to display the market information we need to either A, trade longs to previous day high, or B, trade shorts to pre-market low, right? So see how I'm doing that 50-50 perspective, right? This thing's either going to go up or down today, right? All I need to do is understand what happens at this level and put on risk, right? So price rips all up into these levels over and over, right? So once price rips up into our levels, hold on, because this day was a bit hard. Notice how their buyers are trying to defend PDL, right? So this is what we call the battle. We don't know what to do yet, right? The market hasn't showed us anybody losing yet. We have buyers trying at PDL. We have sellers trying at our area of value. But the market hasn't showed us yet who's lost. So until I understand who has more strength, I don't want to put on a trade. Now, this goes back to what I was talking about earlier in the lesson, where until I'm aware of that principle, it's going to be hard for me to display patience. Let me say that again. Until I'm aware of these principles, right, that I need to wait to see who controls this level, it's going to be hard for me to display patience. Patience was a big one for me in the past, and it's because I was ignorant to the principles that actually work in the market, right? So once again, until I see somebody lose here, I do not put on a trade, right? Buyers trying to defend PDL, sellers trying to defend 554, open prints in the middle along with end of day. Right here, this looks very bullish, right? But we haven't really made a higher high yet, right? Now, I'm watching price bounce back and forth, and then these buyers try to step in, and then boom. This red candle really tells me that they're being invalidated, right? Buyers are being invalidated, right? They're not showing strength. We're getting a more of an engulfing candle into the lows. See how these candles had wicks? That communicates to us and tells us through visual representation that buyers are soaking up sell orders. Buyers are soaking up sell orders. Now sell orders come in and not so many buyers soaking up. Once again, this is a way to understand sellers have more strength than buyers at these levels, right? So then we took the market short as price comes up retesting open print, right? So watch here how price literally open prints right here. Okay. Price now comes down, comes up, tags open print, and then we get this bearish doji candle falling back below the 9. This right here would have been a perfect entry for a short play. Does this look bullish to you? Once again, remember, it's all about real estate. This is the critical point. All these critical levels next to each other. Is this displaying a bullish chart pattern? Absolutely not. So this is how the market communicates to us and tells us, listen, I'm bearish today. Here's these 4 critical levels here, Josh. Each one of them, right? Buyers tried, sellers won, right? So then this is where you want to take your market short. Now, you know what I mean? Where does price need to go to invalidate my short play? It's going to be, once again, if you're playing off the critical level, if you're playing off market structure, even if you took this short off PDL, right? This was my first entry. If you took this short off PDL, where do I need price to go to invalidate my methodology above open print? Why? Because this is bearish market structure. Okay, you're getting a low, right? You're getting selling off 550. You're getting selling off open print. Now you're getting selling below previous day low. So I do not want price to make a higher high, and more importantly, I don't want buyers to break structure, because I don't know if sellers are going to hold this. I don't need to know. All I need to know is where price needs to go to invalidate my short play, right? So you take this short, you put your stop above OP, maybe even end of day, you assume the risk, and you take the market short, targeting the next critical level, right? And price literally came all the way down. Our critical level was very low down here, but it's crazy because watch, price literally sells off, rips right up to PDL, and then starts to come back down in sync. So guys, I hope this video really helped you understand, right? It's not strategy that makes you consistent. It's your philosophy. It's your understanding of the market concepts and the dynamics, right? If you guys want more video content like this, drop a comment below. Get involved with our Discord. I'll see you in the next lesson.